All right, hello everyone. I'm very proud to welcome you to our Ninja Trader Ecosystem Trade Like a Pro webinar series. I'm your host, Jared Meyer from the business development team here at the Ninja Trader Ecosystem. Before we do get started today, I do want to do a quick test of picture and sound. If you would just please type in where you're joining us from in the room, if you can clearly hear my voice or and see the projection as well. All right, excellent. Thanks, Dave, for joining us, and John in San Diego, Jay in Los Angeles, Bob in Philadelphia, Dieter in South Africa. Clearly getting some confirmation. Thank you all for that. And before we begin, I do have to go over a quick disclaimer here. It is important to understand that there are substantial risks in trading commodity futures contracts or foreign currency. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstances and financial resources. It is possible to lose all the funds deposited with your broker. You could even incur losses beyond these amounts. Please inquire at brokeragesupport@ninjatrader.com for more information or for a copy of the CFTC full risk disclosure. Also, please do know that these ecosystem webinars are educational in nature. They're not a solicitation or recommendation. Here's a copy. Here's an email address for our brokerage if you have questions to submit to them. And we have a very exciting event. We do have Raul Jimenez joining us in the room from Gold Zone Trading. Unfortunately, Sean Kozak was not able to make it today, but Raul is going to be here and presenting. Raul is going to demonstrate a new way of defining true levels of support and resistance using a volume profile confluence with Golden Zone Trading's VPCLevels. So, whether you've heard of Golden Zone before, or if you're completely new to their concepts, you're definitely in for an exciting demonstration and some remarkable trading insights today. Please join me in giving a warm welcome to Raul Jimenez for this Trade Like a Pro event. When you're ready, please take it away, Raul.
Okay, thank you again, Jared. We had a little bit of a microphone issue there. I'd like to thank Ninja Trader for the opportunity to address the traders and worldwide audience that they have. Before we continue, actually, I'd like to go over our disclaimer. Golden Zone Trading has no financial interest in the outcome of any trades mentioned herein. There is substantial risk of loss when trading securities. You need to determine your own suitability to trade them, and there may be tax consequences for short-term profits or losses on those trades. Consult your tax professional for details as it being applicable. Uh, Everything that we're going to be showing and our product and so on are for educational purposes only. We do not have any opinions, news, research, analysis, prices, or recommendation as to any trades. And the last thing is the hypothetical performance, which is what we're going to be showing you, may have inherent limitations. You may not achieve the same results that we do based on real trading account and the real trading world out there when you go live. So with that, I actually like to go on to the next slide here. So we're going to talk about the credentials. I'm actually going to talk about the credentials of our head trader, Sean Kozak. And we're going to talk about the leading or lagging structure versus volume. The VPCLevels, which is a new product, we're going to go and have an overview of that product. We're going to show how Volume Profile Confluence is calculated and explain the validity of this technology in your trading world. The other thing that we will show you is we're going to show you a demo, and we're going to actually let you know that we do have a trading room and we do have a mastery program. The mastery program is one in which we actually teach traders how to trade. And so with that, I think Jen is going to post the link to join us, so you could actually visit our trade room and watch us use the software and trade live. With that, let's talk a little bit of who is Sean Kozak. There is a motto that Sean mentions every time. He says, there is no fluff, no snake oil, no subjectivity. We trade based on objectivity, based on analysis, and guidance that we teach our students on how to trade. Our main area that we concentrate is basically keep your money, right? In other words, we manage risk because risk management is one of the major issues that we have to contend with. And so trading effectively means that you must manage risk. So Sean actually previously he worked on oil and gas for a number of years. He finally eventually got tired of that and got tired of being covered with oil all the time and figured, well, let me try something else. Let's go and do a new type of a thing. So basically what he did, he went and he got a degree in finance, and then he joined the Canadian Securities and got a Canadian Securities license. So this was the start of his trading career. The trading career, of course, for most of us, doesn't start in a very positive manner. We actually start learning about indicators and we start applying them, we start trading. And really, Sean mentions that one of those points where you actually like a point that tells you, hey, I need to learn more. I've basically need to change from being an emotional trader to being a trader that actually controls his trades and has a plan for all those trades. So Sean actually mentions that he lost about $30,000 in about a 4 minutes time frame as he was trading and trying to average in. So that was actually a big change for him. So he said, I need to do something else. I need to change. There are things that I don't know. There are things that I need to look for someone that knows how to do this thing. So he sought out some institutional traders. Um, this was people that were working at the CME, CBOE, and he finally ended up in a prop trading firm. The prop trading firm traded options, equities, FX, and futures. So this was something that Sean, actually, as he learned more and more, he saw that there was a need, basically, for trading supply and demand because that's what drives the market. And we're going to talk a lot about that. So he is the founder of GCT Golden Zone Trading. Uh, he actually uses the indicators and he's a system developer. His main thing is education. He is very good at educating our customers and showing how you could be successful trading, following a plan, because that's the big thing for us. We always follow a plan. And he always says, we have a rock star programming and support team. I actually run the support team, and many of you that are already customers of Golden Zone have spoken to me. And you know that when I connect to your computer, I tweak the computer to best performance for that system. I also show you how the systems, the applications can work for you. So we also have a fantastic programming group inside our company, and they are currently, working on all that, moving everything to NT8. So when NT8 launches, we'll be ready for the customers. One of the things that we have is that we actually, when we create an application and sell that to the public, we also give you support for life and free updates. So in our trade room, if you were to visit the trade room, Sean would show you a document like this. And this document happens to be all the trades that he's taking. I don't have the last document, but what I did is from the last presentation, I did a couple of screen captures as to he was showing it that day. And you will see he's taking about 641 trades in the room, and you see win rate, payoff ratio, and so on. The document that we use also allows us to look at the equity curve, and you can see the equity curve there from the beginning of the year to present. And it's not all about just winning all the time, because you see in some cases you actually have an equity curve, and the equity curve is pulling straight up. Then there are times when it's a little slight pullback and pick up again. It's not always about winning. It's about staying in the game, about being successful in the game, and making sure that this equity curve in time it has a positive outlook. So let's go on to the next one. Now, the tool that we use also allows us to look at the trades, and this is from the trade room. These were all trades taken in the trade room live, and we can actually say, well, what is the best day for trading for us? When are we most successful? Are we better at long trades or short trades? Sean is actually better at long trades. I happen to be better at short trades. And also, we can differentiate and show each of the instruments that we trade and how successful we are with each instrument, how many trades we take with each instrument. So let's jump to the question of leading or lagging structure versus volume. And we each have a specific idea as to what to use, how things work. And what we're always doing is we're looking at market structure. We're looking at something that happened, and after the fact, the measure of pressure, the thermometer that shows us all those little lines there show us what took place in the marketplace, how price, volume were driven to a certain level. And we may try trend lines, pivots, swings, channels, and each of those look at something. But you should always ask, what am I looking at? What you're looking at is the effect of the institutional traders as they basically turn the market from one side to the other, up to down, rallies, falling of the market. And some of us would trade, swings. So say, what I'm going to just trade, like the tops and the bottoms when I see this, and as it retested, I'll go long or I'll go short. But basically, you're not looking at the internals of the market. You're looking at the effects of the market. An educated trader can translate into a successful trader. And you do this by looking at the internals of the market. The charts I'm showing you is simple charts, trend lines, common indicators that we use. So what do they all have in common? Well, they're all calculated from movement of price, which is in effect volume moving price. It is all market order flow, supply and demand, and how we each as traders and also institutionals react to those levels. So let's look at the VPC levels overview. They tend to give us a leading analysis, and I'm going to show you why. By looking at those trades that took volume at price in the past, we can ascertain levels of great interest to the institutional traders and even to the commercial traders. We look at order flow and volume. Everything that we do in this indicator is driven by volume. Support and resistance levels driven by volume levels. So that in essence, this allows us to look into the future to a certain extent, to see those areas where there can be either acceptance or rejection, a volume at price level. Now, when we combine the MTF, the multi-time frame, with the confluence algos that we have, you could actually have a chart that has 3 days of data or 5 days of data, where we are able, through our algorithm, to go back and look at 300 days of data and find you the relevant, strong levels that you can actually count on that were levels of interest at either supply or demand in the past, and they're brought forward so you can look at them as they would affect your current trading. So you always have the latest levels, and you can plot them, and they're all dynamically plotted. So expanding, contracting, not something static. Because if you look at pivot points, you look at some of the other indicators, they can be static. This is something that's dynamic, it's moving in reference to the market movement and the forces of the market. So we display the strongest levels of the multi-time frame volume, support, and resistance. Now, there is one way that we can actually look at this. We're looking inside the data, and we find confluence within that data, but we can also differentiate the levels. So we can look inside the data to see what actually affected that level. Is it one that's based perhaps on point of control? Point of control being where the majority of transactions volume takes place at a price level. Or is it the volume weighted average price, the VWAP? Value area high, value area low. All those things are taken into consideration by our algo as it calculates and provides you with the information relative to what you need to look at, those levels that are important to you. So these are the 4 levels that we'll look at. And we'll look at them in specific time frames. And I'll show you that. The default is on a 3-minute time frame. So it looks at 3 minutes, and it goes back and it creates a large amounts of profiles, and it plots all these point of controls, VWAP, value area high, value area lows. The algorithm then goes through and finds confluence. If we were to look at confluence, and I'm gonna show you here, you see price moving down. So there's actually a profile there. Price stalls, a secondary profile. Price moves down, again another profile. So you have almost an ABC pattern right here, a corrective pattern consolidation. Then price actually takes off again. Each of those moves gives you a different profile. If you are to extend, as we've done here, the VWAPs, BOC, value area high and lows, you'll find areas of confluence. There's one right here, one right here, and one right here. So as we go forward, we're going to see how those levels are levels that will act as support, will act as resistance, as price moves through different levels. So let's move on to the next here. And so the internal view. If we were to actually look at the internal view as to how all this is calculated, this is an example. And if we go through the color scheme, what we have is value area high, which is the purplish looking pink color. The yellow is the point of control. VWAPs are blue. Value area lows are green. So you have all these lines, and you could ask yourself, well, how am I going to trade with all these lines here? It's almost impossible to trade. But when you run at the algorithm and you go and run confluence on it, you end up with levels. Levels that act as resistance, certain points, support, resistance again here at this level, moves down. The level right here that you see at this arrow, and you see this line right here and this other line, it was actually printed on the lines that took place here. So by the time you actually see price start to move down, you actually know that that's an area of strong resistance, and you actually see them here. Then you actually see, actually I meant support. You see resistance as you go up. Comes back, support, and then moves through the other levels of resistance. So we were to use this for a buy setup, and this is how Sean talks in the trade room. First of all, we actually have standard bars, one of our other tools that we use for trading, and one that gives us directional bias. So in directional bias, as price comes down, and the little blue line that you actually see is a valid level that was printed by the VPC. Price moves up, comes back, touches that level, and that's the long. Where is your next target? Well, your next target, there are 2 levels that you can actually use. Target number 1 could be at the level of the next supply zone right at the edge, because it's a low volume node right there. And the second one could be this one up here, which is a VPC level. So let's look at this also in another way. This is another tool that actually looks inside the bar. And you can see again, price went up, broke through resistance. Resistance became support, came back, touched this level here, went through, and then we actually went in the long. And you see the target That's the entry, target 1, target 2. Now all this can be driven by VPCLevels. If I was able to show you the level over here, there would probably more than likely be another level higher, which would show you another VPC level. How do we use this in a sell scenario? In other words, when the market is moving down, we actually have here, price moves down, hits a demand area, goes up, there's a supply area. At the supply area, you actually have a VPC level, goes past the VPC level, and comes back down. Our entry takes place there. Where would our target be? Our target is at the next VPC level, right at the edge. Not necessarily has to be right at the level that it shows, because again, you got to think this is confluence. There were a large number of lines there: point of control, volume area high, volume area low, VWAP, and all those get plotted as a single line. So it is safe to say that you could be a couple of ticks above or below, and that could be your target. When we use this, using our secondary tool, print profiler, looking inside the bar, here's the trade. That's the VPC level. Price goes up. We enter the trade. Price that's moving down. We actually put a T1 and a T2. Now the T1 and the T2 basically are based on the 1-to-1 ratio or 1-to-1.6 ratio. So let's move on. Now, we talked just a little bit about the tool set. We talked approximately about 20 minutes on this. But really, the most important part that I see is really to have a demo, to show you really what is behind the tool set. Because one of the, I'm going to actually, as I show you this, let me go ahead and stop the presentation here. What I'm going to do at this time, I'm actually going to, I'm a Ninja. I'm connected to data right now. Question in the, Jen, if you would just maybe just go ahead and take the question and place it for me. We can use this, and this is actually, you're jumping the gun on me, but let me show you. Let me open the workspace. We can use this for stocks. We can use this for ETFs. We can use it for Forex. We can use it for, in this case, I have oil. You have futures there. We have gold. No, the profiles don't have to be of the same duration. We're going to actually talk about that and show you that, because in some tools to actually show a profile, you may have to go into, let me see, the VPC indicator. Let me go ahead and add it. Here's VPCLevels. It takes a little bit. Remember, it's going back 300 days. It's putting a tremendous amount of data in there behind the scenes, and then after that, it's going to draw us a profile. So let's let me just make sure that I have it set correctly. Line width 3 small. Okay, that should be okay. Let me put that there. But what I wanted to show you is that, okay, first of all, here we have the YM. And if we go and we looked at levels there, you see there the movement here. It can, well, it depends what you mean by daily data. We actually need to have some minute data to be able to calculate this. So what I actually do, if I wanted to look at daily data, what I would put is 1,440 minutes, which is a day. And then I would probably look at the largest level. The same thing would be relevant. Let's say if I want to look at a fraction of a day, I may on Forex, I may look at 240 minutes. And 240 minutes, I may change the fraction of which I calculate. Actually, I know now why I didn't get that information. Let me go ahead. I need to connect to Kinetic so that I can have the Forex data. Okay, here we go. So basically, you can see any type of bar. And the purpose of showing you this here is to show you that it can work. These are Renko bars. And so it's actually now working with Renko bars. You can see there was a heavy level actually here at this point. And I'm actually going to go back in time. So let's go like this. That level, as price came down, that level had already printed. It existed and was created probably many, many days ago. Let me go ahead and go like this, and then we can actually scroll back. And we can see there's a lot of history to that level. That level was actually calculated many, many days ago. And that could have been, a month or 2 months ago. So that level is heavy level, twice there. Price comes and bounces off of it. Now, what levels at that point in time? Let me see, because it's always good to look at point in time. If you're looking at the future, then you say, well, I already saw all that type of stuff. What do you have here? Well, you have a bounce right here, right? That could be a call for a long. It's 3 bars here. So let's say that we go long here. What would we have as our target? Well, this is a weak level. And the reason being this is just an extended line. But the levels that we have of interest are this level right here at 1327.10. Next level at 1328.30. So we're going to go bar by bar. As we go forward, it's actually calculating dynamically here. And now all of a sudden, when you're here at 1325 price, you notice at 1325.40 a level shows up and 26.20. We go there, what happens? It goes to that level, bounces, comes back down. Now the level is still resistance. Come back down. The support level over here holds. A new support level shows dynamically. Now notice that the bar actually turned a little bit lighter. It's an extended line. It doesn't have as much strength as it did before. Now price goes straight to it. The other one is weak at 1327.30, 1328.30. It's a stronger bar. So you can actually see how the lines act as support and resistance. It's not a typical thing which is based on swings or based on market structure itself. The analysis grid is done dynamically. It's done dynamically by the software that we wrote. It is an algorithm that is going through here and drawing those lines. You don't have to do anything else but install the software. Once you install the software, it will go ahead and draw those red and blue lines. A blue line is support. A red line is resistance. The level of the lines can be different levels of strength. So I'm going to show you that in just a minute. Let's continue with this. Any type of bar you use, whether it be fibs or whether it be pivot points or anything else, yes, sometimes it goes to the line, sometimes it holds well, sometimes it does not. But the point is, do I have an area that is valid? That at that point there was a large number of transactions that took place at that level. And I'm looking back 300 days. Would that be important? Is that a point of control? Were there a lot of transactions there? The areas, and this is theoretical, what they always, we mention when you study market profile. The areas in the past were price held at areas in the future of interest. The areas in the future of interest are always, and they'll mention this, that always based on historical levels. Historical levels at which large amounts of volume traded. Now, notice now, remember a while ago we didn't have any levels in the euro? So there's euro USD. Now you say, well, I have a lot of lines there. Which are the most important lines? So I'm going to actually go through and I'm going to pick. There is a filter, and you can take the time frame or the swing, and we had it on small, but I could actually go to large, and it's going to give me the relevant values or levels at a higher time frame. I'm just going to click apply because I'm going to change a couple of things now. So those are the relevant levels at a large time frame swing. The other thing, I could actually leave that on small, and I could change my bar period. My bar period right now, every 3 minutes, is doing all these calculations, is drawing lines forward. I could say, okay, I want to look at 30 minutes. So now it's looking back 300 days and it's looking at swings 30 minutes. Now, you may say, well, that's neat, that's interesting, but let's go ahead and leave it at 3 minutes. And let's look at what we could actually establish as noise. Because sometimes looking at the tool historically as to what has taken place, what has been done, helps us to ascertain as to why. See why this thing is working. The plot settings can be differentiated. And I'm going to show you the noise levels on it. So I'm going to change this to true. And I'm going to let you know that there is a plot of colors. Support lines are blue and red, as you can see. But the point of control lines are yellow, VWAPs are blue, value area highs are fuchsia, and value area lows are lime. Let's apply that. I got a myriad of lines. I can't trade this. But now I say, okay, my interest lies in point of control lines. I don't believe that value area high and value area lows are that important. I just want to see at relevant point of controls. Why? Point of controls is most of the transactions took place in the past. So I click apply. And now I see the levels based on point of controls, which were dynamically plotted. Now, if I want to go back to basically testing all of them, I can actually leave this false, false, false. The moment that I change differentiate to true, I'm sorry, to false, and I click OK, we'll cover most of the questions of this at the end. Give me a little bit more time here. How can I get 300 days of data? I can get 300 days of data. Generally, most of the providers of data will give you about a year of minute data. So we go back and we load 300 days, which is really nothing more than 365 calendar days. We're short of that by 60 days. So we're looking at approximately 8 months of data. And out of those 8 months of data, we're extracting this information. Any type, you can actually look at an index and it can extract some of that information from there too. But really, it's best to use a proxy. Let us say that you wanted to look at the, let's say the SPY. The SPY would be relevant to the S&P 500, right? So if you want to look at the index S&P 500, you could actually look at the SE, sorry, the ES 1216 future, or you, as a proxy, you could use the SPY ETF. Now I have a lot of lines here, and what we do is we actually refine this by going through and picking, okay, we have smallest, let's pick default. And then as we look to, okay, which one is the one that best matches the instrument we're trading? Price goes up, breaks, touches, retest, goes to level 1. Now the thing that you really have to think about is this forward looking or not? And you say, well, maybe there's a bunch of lines there. What are they? Well, they're lines, levels that are important in the future. So you could actually, again, go back and say, okay, I don't want to look at so many of them. I'm going to just go ahead and just look at large ones because I'm swing trading. I'm just trading the levels. So you now have the levels. What happened here? This area, you can see there was range bound. Finally, does it break out of the range? Yes, it does. Where does it go? To the next level up when there's a bullish bias. Where does it move? Resistance. This now is becoming consolidation area. Comes back, hitting support, breaks through support. Where is it likely to go at this point? 111.80. The lines change from support to resistance. That's even if you were drawing lines manually. At 326 here, you would probably draw a support line. As price moves up, you say, okay, a resistance line at 501 at level 11, 22, 23. Then when it comes down, you would draw another line. This is looking not just at, this is just the bottom of the move. The bottom of the move took place right at this level, right? So let me go like this and show you. This line here was drawn by looking at point of control, value area high, value area low. What we see is this is nothing more than market structure. If you're trading market structure, you would say, okay, this is where I'm going to put my support line. What we're saying is looking at the internals of the market, this is likely where you should have a support line. As price moves up and it builds this area right here, it actually establishes that this is an area of support. Price comes down, breaks through it. Then this one, which was blue, was an area of resistance. When those areas are hit, the likelihood of high probability of price consolidating before proceeding to another level. Let me move on and show you something else here. So let's look at another workspace. In reality, when you look at the lines on the left, you got to think, okay, if I'm calculating this in 3 minutes, what has really happened? I'm actually going to move this here to another screen, and I'm going to maximize this. What really took place is this. This is using our print profiler. If we were to draw profiles, and I'm just going to draw a number of profiles. So I'm going to draw a profile from price here to price moving down. I'm going to draw another one here as price moves up. I'm going to draw another one here. And I have actually a bigger one right there. So there are hundreds of profiles that have been drawn by the tool. Now, what I'm going to do is I'm going to take on each profile, I'm going to extend the lines into the future. Now, I used to do this before. And what ended up happening is I was able to look basically at about a month of data as I extended the lines. And then what I would do is I would actually draw lines on the ones that I saw there was confluence. And based on that, I would actually trade the day. The tool here, and I'm just going to draw a couple of boxes here where there's actually confluence. Pardon me, but there's a little bit of blinking on the screens. Let's just go there. I'm going to minimize this. I drew some levels. Now what I'm going to do is I'm going to bring something back to you. The VPC levels, here's the level, and this one didn't quite match, but I only drew a number of the profiles that are required to calculate the VPC levels. The VPC levels, in essence, are looking back. It's like you sitting around and drawing either a 30-minute profile or a 10-minute profile, drawing them all for the span of a month, but you're drawing them actually for the span of 300 days. You've gone through and done this, and you have extended all those lines into the future. Once the lines are extended into the future, then you find which ones are, how many of them are close together. There's confluence here, and then you know levels, which is great interest. Now you could draw this for a month, or you could draw this, back more. Now what I'm referring to here is confluence. Confluence is a point in the level of price where they come together, and there's a number of them that are maybe real close to each other. Now, there's an algorithm that we wrote, and it goes there, and it looks at all those levels and says, okay, of those levels that are there, how many are within this range? And it draws a line for you. Okay, in reference to the questions, it can trade through the levels. The levels are not absolute levels of resistance or support. Nothing is absolute, but let's ask this question to you. Would you rather have a tool that gives you some guidance? I mean, why don't you answer? How many of you have used Volume Profile? Or is this something new to you? And if so, do you think it is important to look at the internals of the market? When institutional goes through and they sell at a level and then price moves down. When it comes right down to it, are we as traders the ones that move the market? Or is it the institutional trader, the market makers that actually move the market? If you were to say to me that we as traders are the ones that move the market, no, we go along for the ride. We make an analysis. We see points of interest. We see points at which price moves in a different direction. And then we jump in once we have made basically we had done an analysis. It has met our plan. We had calculated our risk level, and we established a level at which we would exit from a trade. From market profile, it is true. Let's go and go one level from here. Let me move this out of the way. So let's say that we're trading this, and we are. So let's go ahead and erase all that we have here. And we're going to put VPC on. Let's remove the print profiler. And we're going to put the VPCLevels. And there's a tool that we have, and we use that for directional bias. We actually tells us the velocity Momo, which way we should be trading in the market. The velocity Momo, which we use as guidance for direction. Now this is quite noisy here. Oil, so let's go ahead and the VPCLevels in 3 minutes. Let's go ahead and put it at largest. As you move down in periodicity, the level that you use has to be higher. So let's move this like this here. You see the relevant levels. And let me go in here and change something in the tool here to facilitate the view. So let's see here. Background flooding. There we go. What this is going to do is when we see here a bullish bias, versus the background is green, we're looking for a test of support. Now, it turns, let's actually look at pick an arrow right over here. At this level, right here, is where it turns green. So at this point, we're actually going to look for a long, and we're going to look for a test of a support level. And the BB is also being going positive. So the first level that we have is actually a retest. Price goes up, the retest takes place right here. So let's go ahead and do this. We have two areas of entry. There's one there. The other area is the retest right here. If we were to look at risk. Let's go ahead and draw a little box right here. And we're going to go say this is risk. And we've entered at this level. So now I'm just going to copy this. I'm going to paste it. And move it. If we were to enter here, there's a 1-to-1 ratio, right? If you look here, the level we would be interested in exiting would be here. What would be the second level? Well, the second level that we would likely consider would be this. Where would, as we go up, okay, and our trades are executing, where will we keep our support? Well, we probably will go ahead and do this, our stop. As price moves up, where will we move our stop? Right below the R there. Price goes up, where's our third line or third target? Well, maybe the third target could be up here, or it could be up here, because that's just a runner. And the runner will basically exit. Here's our stop. We see price starting to move down. Our stop was set over here. It gets triggered right at this level. And we exit. What did we actually have? Well, actually, we had an entry. We had a move that executed through those levels. Now, what directed us to do that? Well, first of all, the velocity MOMO itself, which we use for that basically for directional bias, we want to trade with the trends. So what that does is it basically shows us what the trend is. So that would be a way in which we actually trade. Now, what I would really like to have you folks do is to please go to the trade room. See us trade in real lifetime. So basically, if you go to goldenzonetrading.com and you put your first name, click on join us, and at that point, there's a secondary thing you need to do. You need to click here on this area for live trade room access, and then you'll be able to watch us on Wednesdays and Thursdays as we trade live in the trade room. Okay, yes, John, yes, you would, you would actually choose those levels where there's the biggest change in volume rather than the absolute high or absolute low. The what is my opinion on that? Well, really, since I actually traded for about 3.5 years, I traded basically market profile, and at the beginning, I didn't believe in it. I thought, well, this is just another tool. But as time went by, I saw that actually those levels that have great interest in the past have great interest in the future. And so that's what we actually ended up trading. So at this point, I like to, we're going to actually go through a couple of more questions, really. But let's go ahead and jump back to the slideshow, okay? We need to cover, because we did mention that there would be an offer, right? And I'd like you to be able to look at that. And we launched this product approximately about a month ago. It is a tool that we use. That is not right. Hold on a second. Let me go. Excuse me a second. Let me just go like this and put this here. We launched this at $14.95. That was the price level that we have for this product. and it was launched approximately about a month and a half ago or so. We used this in our trade room. We used to use another uh, product to calculate the levels and help us with targeting and so on. Uh, but what we do now is that we use the VPC levels. There's quite a bit more because just the VPC levels is not it. We actually do back testing and we also set um, periodicity levels that we use for trading. So the deal is this: the VPC levels multi-time frame product is offered to you for $1,095, 1095. As a special bonus, we allow you to put it on two computers, two licenses, and generally most people have a trading computer and they also have a backup computer or they have a laptop they travel with. For lifetime, you will have email, phone, and remote PC support, which is given by me, by RJ. Secondly, and really most important is the last one, free updates for life. Now, a number of you are asking probably, well, what's going to happen when Ninja launches NT8? Well, when Ninja launches NT8, we will also provide you the VPC levels for NT8. I would dare to say at this point, based on what my talks with the programmer, that we already have the VPC levels and we're waiting for Ninja to have a final product. And at that time, we will offer the product to the customers. It will cost you absolutely nothing because you could say, well, do I buy this now or do I just wait until NT8 comes out? When Ninja 8 launches, the product will be available to you at no cost. So there's no fear in purchasing this product. Now, you will also get 1 month of free trade room access. And the trade room access is going to allow you to actually see the transactions that we take, the analysis that we make, how we teach people to trade. Because really, what is the most important thing when you figure out about trading? I started trading a long, long time ago. I've been trading for over 10 years. So what happens at the beginning? You start discovering tools. You have a number of tools, and in time you end up learning more and getting better at trading. The important thing is always to have a good teacher. Sean is a fantastic teacher. If you join us in the trade room, even if you don't purchase the product, I mean, we'd like you to use this product, but if you just want to visit the trade room and see how we trade, how we teach customers to trade, how efficient we are in our trading, and you say, well, can I learn this? And the answer is yes, we can teach you to fish. We teach you how to do the analysis. We teach you how to use the tool set. We teach you how to trade because that's our job. Our job is not just to sell indicators. If we were selling indicators, we wouldn't have a trade room. We sell indicators. That's it. But we sell indicators with a purpose. The purpose is to teach you to trade, to use the product effectively. If you actually buy this product and you need help with installation, I would actually connect with you and install that software for you. Now, let me the deal here actually, even though this is incorrect here, is 1095. This is actually through September 29th. In other words, it's not for tomorrow. We extended the deal until September 29th. Actually, that's even incorrect. That's tomorrow. Sorry. It is through September 30th, which is Friday at midnight. That deal will go off. If you need help, if you want, or you have other questions, you can actually send email to sales and Ninja. If you want to join us, please go to the Ninja Trader site. I'm sorry, YouTube site. Jenny, would you actually post the YouTube link? We actually go and we post all our trades. The trade room is recorded for those people that are in the mastery program, and they get to see those trades. For you, as invited to see that, you can actually join us in the trade room Wednesday, Thursday, or you can go to the YouTube channel and you'll see the trades that we have. Some trades are the trades from the trade room. Other ones are trades where we actually is real money. It's actually done later, and Either Sean or myself will be trading. We post those trades there. Will this work on tick charts? It will work on any periodicity that you have. Let's go ahead. Let's change this. We have it on 3-minute charts. Let's go ahead and erase everything from here. Remove all the drawing objects. So what I'm doing now, what I want to do now, I'm going to change the periodicity, data series, and I presume you'd mean just ticks, not a range bar. So we're going to go tick, and let's just see what happens with 320 ticks. Let's load 3 days. We have a lot of questions. If we don't answer your question here, please just go ahead and contact or send email to support@Golden Zone Trading, and we'll be more than happy to answer your questions. If you need to reach somebody at sales, please send email to sales@Golden Zone Trading. If you send something to support, it generally goes to me. So here's a tick chart, 320 ticks. What happened? Price broke down. There was an area where it actually turned, came back up again, hit resistance, went back to it, broke through what then was support, and then came back down to the previous level. Now, you say, okay, well, you drew that just now. No, I'm going to tell you this. When you were trading right here and you decided based, okay, let's go back a little bit because actually there was a short. Let's say you actually saw this here, you saw the short, and you say, what levels are relevant at that right there? 4703. What level? 4665. What happens to price? There's one. Comes back, hits that level again, comes back down. Now the distinction you're actually seeing, all these lines and all these dots is actually, I should have turned that off. On the velocity Momo, we actually have divergence. It's a divergence tool. So if I turn those things off, we won't see those there. Now I actually trade this, and you could ask me why. Well, instead of me having to draw 10, 20, 30 profiles, maybe 30-minute profiles, I can just go ahead and look at this thing here, have it calculate that for me. And then all I need to be concerned is about, well, what are the levels that are of importance to me? Now, there are a number of indicators also that we have, actually some tools that we give to our customers. And Jen actually posted that. So you can actually go to software free indicators, sign up, enter your first name, last name, email, and phone number, and click on submit, and you'll be directed to all those free indicators. Any other questions? Otherwise, we're just going to wrap this up. We're about 2 minutes away from end time. We talked about an hour. I appreciate all of you folks who actually stayed through the presentation. And hopefully what we've shown you is something that is interest to you. And Sean will be back, and we'll be back in the trade room next week. So please sign up and join us. Watch us trade. I turn it back now to Ninja Trader. Jared.
All right. Thank you, Raul, for sharing with us your insights and perspective on the markets, as well as the incredible special offer for all in attendance. I'll go ahead and post that offer link again for everyone that's here in case they did not see it the first time or would like it there. If you did show up late for today's event, please don't worry. We have recorded the webinar. We'll email all registrants with a copy of the recording. It should be out to you tomorrow. Once more, I want to give a special thank you to Raul and the team at Golden Zone Trading for the great presentation and offering our Ninja ecosystem family a very special discount on their products. Thanks again for your attendance today. Please enjoy the remainder of your week. And as always, happy trading from all of us here at NinjaTrader Ecosystem.